Hello and welcome back to Fibonacci Trading Masterclass by Wealthy Education. In this video, we'll talk about strategies for trading Fibonacci extensions. Now, a Fibonacci extension uses the same mathematics as far as ratios are concerned that a Fibonacci retracement tool or levels will bring into the mix. The difference is, unlike the retracement, which you'll see something like this, and you'll see a pullback, and now you're looking for a buying opportunity to join a trend. The extension gives you an idea of where it could go down the road. Now, I will say this. There's two things that you'll need to keep in mind when it comes to extensions. They are projections, and the problem with a projection is a lot of things can change. So they aren't talked about as much. They're basically a tool where you get the Fibonacci pullback. Once you break above here, where could we go? You're just kind of trying to find, based upon the same ratios, where the market's likely to go. It is not commonly discussed, but you will hear it every once in a while. So it's certainly important that we at least touch on it in this course. Again, by the very fact that you are rallying, pulling back, and having to take out this swing high makes them not as commonly followed, because a lot can happen once you take out that swing high. But nonetheless, for a longer term trade, it does make quite a bit of sense to at least look at it, give you a heads up as to where we could go. This is the pitchfork menu, the same place you find the fib retracement. Next one down is fib-based or trend-based fib extension. Here on the letter X chart, which is US Steel, you can see that we made a move down to there. And you'll notice that it gives you 3 points to plot. Start, swing, in this case swing low, and then back to where you started again. That will automatically stretch this out. So this was the whole move. That's why it's 1. And then now you've got 1.618, which is 61.8, but 1.618. You can see that we did target it, and eventually down to 2.618. And you can see that we did hit that eventually. Now, this is a daily move, or I should say a daily chart. So this ended up taking 2.5 years, but this is a nice trending kind of target, right? The most common one to hit is the 61.8. To hit this one down here, you really have to have a breakdown of things. So it can be used in multiple markets. So again, let's try it over here in the EOS from this big sell-off here. And you can see that we pulled back, and then once we broke down through this low, we did go down to the 1.618 and then bounce from there multiple times. And as we continued, it continues to offer a bit of interest to present day as I record this. So as a general rule, traders will use this to project out the next couple of potential targets. Now, you would use this the same way you use the retracements, with the exception of a lot of times when you're talking about extensions, it's once you break this fresh new, in this case low, entering the market, it would give you an idea where you can go. Now, obviously, you need to place your stops according to whatever the price action says, but this at least gives you an idea of how to enter a trade or enter a trend that has already clearly asserted itself. Dollar Canadian dollar. Now there's multiple ones here, but let's go ahead and take a look at this one here, and you can see once we broke above here, we did pull back, but you can see we hit the 61.8 or 1.618. And then eventually 2.618, which was, 2.5 years later. And again, it does tend to favor, I should say, longer term kind of trend trades. You can use it on smaller time frames. Don't get me wrong. You clearly can. but there tends to be quite a bit more noise. So for example, had you used it here, yes, you did hit that target, the first one, but you also had a pretty significant pullback. And that's going to be the thing that you need to learn about technical analysis. You work from a higher time frame down. So the higher time frames do tend to be much more reliable. And that's why a lot of times traders will learn on the daily or even the weekly, because it gives them A, more time, and B, more clarity with a lot of their analysis. Furthermore, you're following the longer term trend, which is typically driven by the fundamentals, interest rates, economies, earnings in a stock, that type of thing. So it all kind of marries up quite nicely. Now, extensions, again, they're not something that you see a lot of, but it is a tool that's out there, and it's something that you should be made aware of.